Good morning and welcome. Patriot Radio News Hour. Joe and Jason on a hump day. Happy Wednesday out there. CPI is out. We've got the Fed. They're going to have their press conference. No rate hike or rate cut coming today, but it's all going to be about how dovish is Jay Powell going to be? And based on what we've seen this morning, it's going to be very dovish. Our toll-free number, 800-951-0592. The website at allamericangold.com. And, of course, Wealth Insurance, the physical delivery of gold and silver. And I hope you've been putting it away. Jason, it definitely looks like we're going to have a big up day today. Stocks, the Dow's up 200. The S&P's at a record, up 50, almost 60 points. The NASDAQ's up 250. As they said, the drop in gasoline led there to be a little less inflation. Of course, I don't actually track inflation, but nonetheless, 3.3% year over year was the number. Remember, yesterday we talked about it. They needed 1/10 or less month over month. It came in flat. It came in at 0. So they're again, the softening that they want to see, I guess, is the main thing. It's kind of funny now. This is how they do it, though. The mainstream media, Wall Street, and I'm going to assume Jay Powell later today is going to try to convince us that this 3.3% number is a great number. And matter of fact, we can cut rates. It's kind of interesting because I thought the number was supposed to be 2%. When you do the math, right, that's way over 50% higher than it should be. But, again, Jason, if you just wait long enough, I guess, listen, why don't we wait another year? Maybe we'll wait a couple of more years, right? I mean, eventually it'll get back to 2%, I guess.
Well, I mean, that's why I think there's going to be a financial reset, is because I don't think it can go back down to 2%. There's a lot of money printing that's gone on, and I think it's going to be difficult to get inflation down to that simple 2%. I mean, let's face it, Joe, they had the mandate of 2% because I think they had inflated it to the point where it had to be 2%. So there'll be a new mandate. My look at it, Joe, is there'll be a new mandate, 3 or 4 or 5%, which will actually equal 6, 8, 10%.
Yeah, that's the thing too, right? You got to double the number, but still, I guess it was a better number, right? Hey, it was lower than the previous number. Gasoline tumbled 3.6%, was really the main driver of the lower CPI. Core CPI up 0.2. That was also a tenth lighter than expected. It is now at 3.4% on the core. Like I said, the headline, 3.3%. Shelter, yeah, guess what? Didn't cool off. Up 0.4% in May. The largest factor in the monthly increase, obviously, right, because that's the biggest bill. Shelter inflation, 5.4% year over year. It actually did fall year over year. Year over year, it went from 5.55 to 5.41. Rent inflation up 5.3%. That was also lower the year over year from 5.44%. But again, the big driver there, energy prices, service inflation didn't get any weaker. 5% on service. Super core, right? I don't understand all this nonsense. Core, super core, deflator, super core fell. Actually fell 0.05, so like a 0.5%. By the way, the first drop since September 2021. Unfortunately, year over year, still up over 5%. as well. So that's kind of the numbers there on the government's reporting of the CPI. This got gold, stocks, silver, copper, right? Everything's rallying here because we're expecting a very dovish Jay Powell today, leaving in place the odds for that September rate cut. Like I said, it's not going to be because inflation fell to 2%. That's not why we're going to get a rate cut. But I will say this. I actually expect gold and silver to be a lot higher after Jay Powell speaks, because I think everybody's anticipating a very dovish version of Jay Powell today, Jason.
The next Fed meeting, is that going to be late July? Is that right?
Yeah, so 6 weeks. It'll be right at the end of July, right, that right before August, right? But it's going to be, I think that will be the one where you're going to see them talk about rate cuts, because they like to deliver, right? You know how they do it. And Jason, you say it all the time. When they actually say we're going to raise rates or lower rates, they tend to do what they say. And I think it's at the next meeting we're going to hear Jay Powell start talking about the rate cuts, and then we're going to get one in September. That's just what I think is going to happen.
If we get another CPI year over year that's this level, 3.3 or lower, they could just lower next month. It could happen next month. It could absolutely happen. The way that this number came out, and everyone's going to have happy feelings. You get a nice inflation number that's 3.3 or lower on the CPI next month, and I think they just lower it, possibly in July now, Joe. I think they're advancing this thing.
You know, it's funny. It's on the table, isn't it? It is on the table, and would put them a little farther away from the election. Oh, maybe. How high is gold and silver going to be as they start cutting rates? We'll be back after the break. Eight 800-951-0592, Patriot Radio News Hour. Joe and Jason here on this Wednesday. The Dow is now up 100 points, so kind of coming back down a little bit. The S&P's up 57. The Nasdaq's up 300. The 10-year note. Look at this thing. Wow, what a decline. 427 on the 10-year note right now. 427. Hopefully we can get some lower rates. Maybe housing can pick back up a little bit. Oil's a little higher. Right now, gold's up 17, but it's early. I wouldn't be surprised, if it doubles that number or more potentially. But we're going to have to wait. Gold's probably going to hang out here, waiting on how dovish is Jay Powell going to be. Silver back above 30. There you go. I hope you got it. Took advantage of the Silver Eagles that we had on sale earlier this week. But silver is up 85 cents right now. And again, I think we're probably going to see even higher prices than that. Being diversified here, you can kind of feel the bubble here. It's nonsense to talk about cutting rates with inflation. When they say 3.3 or 3.5 or whatever, three something number, we all understand. It's probably double that, right? So what are we really saying? 7% inflation's okay? I mean, when you look at most of the important numbers, shelter up 5%, almost 5.5% year over year. Can you imagine if every year you had to pay 5.5% more for your rent? And that's what's happening. It's exactly what's happening. Matter of fact, here's the funniest thing about all of that. Who was it, like Redfin or Zillow? One of them. They're talking about rents have hit a new all-time record high across the country. We haven't paid more. But yet, this is the bubble we live in. It has to happen. Why? I'm going to tell you. Guess what? Remember, we've been telling. Moody's came out, right? Then it was PIMCO. Today, it's Fitch. There's a big problem brewing, but this is always how it works. Get more diversified. Now, you can't wait, because here's the problem. As we all know, once the thing starts, it's a snowball, and you get no chance. And remember now, this isn't bail-out stuff anymore. It's all bail-in. They have the ability. They changed all the rules. They can lock you up like, oh, I got my E-Trade account or my Schwab account or Vanguard. Yeah, no. They have the ability to say, no, you can't sell. You can buy. You want to buy, you can, but you want to sell, no. And they'll use all the tools. Believe me, when they didn't put them in the rule book because they don't think they're going to use them. They know they're going to use them. That's why we keep telling you, get your gold and silver put away. Check out our friends over at YRefi. Why? Because you can get 10.25% fixed rate of return. That's great. Right? That's cool. But that's not why I'm telling you to do it. I'm telling you to do it because guess what? It's not correlated to Wall Street. Why would that be a bad thing? I mean, it sounds pretty smart to me. If you've got $50,000 or more, call them, check it out, investYRefi.com, 888-YRefi24, 888-YRefi24. Call these guys up and see if this will work for you because, Jason, as we said, Fitch, the latest now, says this whole commercial real estate delinquency rates, get ready for the next big spike up. They're saying that exposure remains significant, that performances continue to weaken, and this is the thing no one's talking about. This was already going to be a problem. We knew we just had to wait to get here. But what Fitch is saying, and they updated their analysis yesterday, so this just came out, says they don't see a bottom in the markets and that their office loan performance continues to weaken as they're saying that the outlook is deteriorating. And all of a sudden, Jason, I think we're going to come out, we're going to see a bunch of banks getting ready to be downgraded.
Yeah, I think we're going to get a bunch of banks disappearing off the map shortly after that. This has been something we've talked about since 2022. I mean, the Fed said there was 1,200 banks that were in trouble third quarter 2022. So everything that's been going on ever since the printing of money during COVID, which was a response to the markets weakening in 2019, Joe. It's just, I mean, look how slowly it moves. 5 years. 5 years that the heightened danger of these markets, about to explode, and they've been able to kick the can down the road to whatever we're getting ready to hit here, because it's going to happen this year, it's going to happen next year, and it sure seems with the record buying in gold by central banks, and I mean, I saw the story of South Korea having gold bar machines, and then the citizens are going and just completely buying out the machine. It's like these little tiny 1 gram little, looks like a little postcard, little an oversized stamp with like a 1 gram little sheet of gold, and it's 66,000 wands or whatever they use over there, and they're selling out. And the central banks are buying at record levels. So whatever we're going to head into, Joe, it's going to be bullish big time for gold and silver. We tell people to buy gold and silver right now because it's going to explode. You want to keep hearing, Joe? It's unbelievable to me if you just understand this a little bit. Gold just went up too fast. I'm going to wait. It's going to go down. It's just, you got to look at the history. All you have to do is go to 100-year gold chart and look what happened in the 70s. Yeah, there was a year or two where it went down, but if you look at it over the decade going into the 80s, it just went up. It went up, and it went up dramatically, Joe.
Yeah, and now Fitch is revising their office delinquency rates. They say before the year is over, it will be worse than the peak financial crisis delinquency rates. Here's the sad part about it. Fitch is saying, hey, listen, we may revise it higher again. So we're already forecasting it to be a record. But here's the funny part is it doesn't get better into 2025. I've never seen a number this high. They're talking about an 11% default rate, which the previous record's only 8%, so it's almost approaching 50% higher than during the financial crisis. They're saying office values have fallen 40% so far, but then they caveated it and said, hey, guess what? It's not done falling, right? It's going to get even worse. Vacancy rate, San Francisco, 40% of all office spaces empty. Dallas, Atlanta, Houston, Denver, Chicago, Silicon Valley, you're talking like 30%. LA, Phoenix, Seattle, Philly, Virginia, Charlotte, Boston, right? You're talking 25% vacancy rates right now. And according to Fitch, the bottom has yet to fall out. And getting ready, I guess this is what we're going to be prepared for. And when we talk about why does Jay Powell need to be dovish? Why? I mean, I don't know how we got this inflation number today, if we really created the 270, 250, I forget how many, 250,000, 270,000 jobs, allegedly. And Jason, the reason is very, very simple. In order to save even 1%, could be huge in terms of how many banks are going to fail. That's really the biggest thing that's out there. And it's something when you watch Wall Street and you watch and listen to nobody wants to talk about it. They want to pretend that somehow this situation isn't going to happen. But not surprised here. I warned you guys earlier this week. I said, listen, get ready. All of these companies are going to come out, and they're going to start bashing these banks here. And I'm still expecting 2 rate cuts this year. I'm expecting record high gold prices. I'm expecting silver here at 30. It's a steal. I think you could see silver. I hate to say it, but somewhere my guess would be, conservative, another 15%. It could easily be another 20%, 30% on silver prices before the year is out.
Right, Joe. And then you talking about defaults. I don't hear a whole lot of bragging about how many new locations of franchise restaurants or businesses. You don't see and Colorado seems to be hopping pretty good, versus other parts of the country. But I don't see a whole lot of new businesses opening up. So these default numbers that you're talking about, 11% for people that don't understand, that's a massive, massive number. Back during the housing crash, Joe, they were expecting the housing. The guys that knew it was falling apart were expecting it to go to 8%, and that was considered, apocalypse for the markets. They had to dump $29 trillion to put that fire out, right, Joe? Yep, what's it going to be at 11% defaults?
Yeah, and this is commercial real estate, so it's not as big as residential real estate. The problem is there's such a big concentrations of banks where this is the space they live in, and this is what's going to cause significant amounts of problems. In right on cue, China today, urging now the BRIC bloc of nations to take greater responsibility to establish itself as being inclusive to the world, and attacking the group of 7, what they're saying, wealthy democracies, and saying that we need to band together and continue to start using our own currencies and getting away from the oppressive United States and their allies. And Jason, I think this is another story that's going to be picking up steam, because I know that the BRICS, they're planning on almost doubling the number of countries. And they even said at the last press conference, there's so many nations that want to sign up. We can't take them all at once. It's going to have to be a process.
Yeah, well, and like I just said a moment ago, sometimes these things don't crash and burn quite as fast as you think, but we're deep into this one now, aren't we, Joe? It's this is not the sideways action of the Obama years after the housing crash, where Obama talked about saving and fixing the economy. It was GDP couldn't get to 2%. This is way down the road of the $29 trillion they poured in is gone, and then the multiple trillions of dollars printed in 2020, the inflation this time that has caused a lot of problems for a lot of people, a lot of nations, and these defaults, Joe. I mean, if we have defaults, it's going to be more than just commercial real estate. It's going to, the credit card defaults are going up. We're going to see foreclosures, evictions. All this stuff is coming. It's all coming. I don't see how it can be avoided. But the Fed was cheerleading for it, right, Joe? They wanted this to happen. This is how they stop inflation, right?
Absolutely right. And I'll tell you right now, this is going to be very, very interesting what happens with the dollar as we watch this ticking time bomb get ready to explode. When we get back, states now saying gold and silver is legal tender. We're going to add to the list here. That's coming up. 800-951-0592. Good news, I guess, on CPI today. I mean, it was good news, right? Still way too high, but at least the way they counted it, a little less high. Terrible news out of Fitch, but no one's going to hear that, right? Nobody's going to hear that because they don't want you to know about what's coming next. But right now, we got gold up $21 here, $23.30. Silver up over $1 and change now, $30.10. And like I said, I think there's going to be an even bigger move when Jay Powell starts talking today. I'm going to give you another great opportunity. Take advantage if you can. $20 gold pieces, Liberties or Saints, you pick it. $24.95. Right now, I already, based on where it sits now, already know what tomorrow's price is going to be. You're looking at a price of about $2,565. But I don't think gold's done going up today. I could be wrong. I don't know what Jay Powell's going to say. It's not like he called me. But I know that he knows that they have to cut rates to at least save some banks. Because they can't already. I'll tell you right now, this is my personal opinion. I think between now and the end of the year, there's probably 30 to 50 banks that no matter what happens are going under. And unfortunately, more will follow the following year. So I don't know. I mean, could we see $20 gold pieces, closer to that $2,600 level come tomorrow? Very possible. So take advantage today. $2,495. Liberties or Saints at 800-951-0592. I mean, you're already seeing it in silver. I mean, silver yesterday, remember, we were at $740 a roll of silver. Guess what? You're not getting that today. It's just not happening, right? There's $765. Probably tomorrow, $775. Be smart here. Add today, because I think, Jason, this is kind of the second leg we've been talking about. We had targeted June. After we targeted March, it kind of moved a little early. Then it just tested that 2,300 level. I think now we're going to see, here we go. This is going to be the next leg up here for the gold markets.
Yeah, and if the so-called inflation numbers that they're going to release show these softer, happier numbers, then what if we or people start talking about a rate decline in July? September looks like an obvious one, so you could start to see gold run this month in anticipation. You could start seeing it running today and the rest of the week, just for anticipation, because that's what the markets have been doing. They've been anticipating the entire year.
Yeah, well, that's now up 25, just like that. Another $5 here. By the way, Louisiana now, the 5th state to enact gold and silver as legal tender, joining Utah, Oklahoma, Wyoming, and Arkansas. Furthermore, Alabama, Kentucky, Nebraska, Utah, Wisconsin passing sound money legislation allowing state funds to invest in gold and silver. And Jason, this is a growing trend now. So many states now have stopped taxing precious metals, but now we're starting to see states start passing legislation that they want some state funds into gold and silver, right? They want to get diversified. This is another thing that, and again, I think as we see these markets, when the bubble starts to burst in these markets, I think you're going to see a lot of these states looking just like everybody else. They're going to be their own central banks, and they're looking to get protection because the dollar here, once the rate cuts start, right, you're going to see that weakening dollar. And, of course, what happens when the dollar weakens? Stuff gets more expensive. I just don't understand. Well, I do understand. There really isn't any good choice, but it really is good to see all of these states now really lining up to start, hey, we need to get smart with our money as well.
And it's interesting because, any state or any local governments, and the other nations that are suddenly getting interested in gold and silver is really saying that we're really not very happy with the dollar. Treasuries are not making us happy. So, the way that all of these leaders of these locales and of course of these nations slowly moving away from dollars, somebody's got a good beat. There should be a panic. You'd think, Joe, that some of these big players moving into gold and silver would create a panic to run at some point. But it's been very, it's been, except for what happened earlier this year with gold really moving here in this country, it's been kind of a nice slow exit, emergency exit to the doors, hasn't it? Year after year, month after month, we have these moves towards gold. And yeah, when you're talking states are moving into gold, which are usually completely dependent upon the federal government now. That's just the way it is now. They're moving into gold, that's them telling the world, oh, we're not too happy with U.S. debt, with dollars. We're not too happy with treasuries. They could be buying treasuries. They don't have to be buying gold. They could be buying treasuries, right, Joe? So this a very loud indication that things are changing very, very very much in what's going to be what is going to happen, Joe. We talk about digital currencies, all these things. I don't think we know the end game, but I think there is a plan. We just haven't been shown it yet.
Well, you know what? I'm glad you mentioned that because you're right about it, right? We don't know the plan. And why do I have this horrible feeling that as bad as I think it's going to be worse than that? And I'll be like, man, these guys are even smarter than I thought they were. And why do I say that? Because it's happened over the 20-plus years I've been doing this. Every one of these situations, oh, my God, it's going to be bad, right? And then it ends up being worse. And then I end up saying, oh, my gosh, I can't believe it. I didn't even think of it. When I was talking about the Amero, some of you have been listening along. You remember that stuff, right? How dumb was that, right? They're like, please, that's not big enough. No, we're going for something way bigger than that. And I think this is exactly why it is that you're seeing so many countries getting and finding new partners, finding ways to trade outside of what I'll call it the West, outside of the West. China coming out today reaffirming, listen, we got to do more, guys. And this is a pace. Believe me, you think it's slow. Far from it. They're going as fast as they can to get out of this. And I think all of you need to do the same. 800-951-0592. Jason and I, we're going to be right back. 800-951-0592. You know, we got Russian ships on its way to Cuba, right? We've got the war drums getting louder and louder. China now saying, hey, guys, we got to get out of this thing. And what's happening right now? What is the United States doing? More sanctions. Here you go. Weaponizing the dollar, weaponizing trade. That dog's not going to hunt. It actually is going to make the problem worse. But 300 new sanctions are going to be imposed by the G7 as they meet in Italy. Most of it going after China, the United Arab Emirates, and Turkey to try to, make the war on Russia more difficult. And Jason, I'm just telling everybody, listen, this bubble's going to pop. We all know that. We just don't know when. We know now, I mean, when you got Moody's, PIMCO, Fitch, guys like Gunloss, Dolly, they're all telling you, Druckenmiller, that this commercial real estate problem is going to wreak havoc into these regional banks. And remember what happened the last time. But the longer game here, this whole sanction and weaponizing of the dollar, it's incredible what's happening. Last week, I reported it, but you know what? No one really wanted to give it weight. Do you know that central banks are now holding more gold than they do any other thing besides dollars? They have more gold than euros, more gold than yen, right? More gold. And this is going to continue. And now here we are. What are we doing? It seems like, every 90 days, 180 days. Oh, here's more weaponization. Here's more weaponization and more weaponization. And, Jason, this is just going to cause an even greater exodus from these countries. Because, listen, these countries know. They know what's happening in Ukraine. They understand, and they're like, hey, we can be very easily the next victim here, and they don't want to be victims. And guess what? Unfortunately, with China and India and Russia, those are 3 of the top 10 economies in the world, Jason. It's becoming a pretty significant voice.
Right, Joe. Yeah, that's why we talk about things being reset. These are all indications what you're talking about of something that's changing right in front of us. And I think it's pre-planned. I think the same guys that make decisions in Russia's central bank or Chinese central bank, it's the same guys essentially. These guys.
Yeah, they want what? They want a bigger piece. Yeah. It is the same guys, but China and Russia. Hey, we want a bigger piece of the pie. I mean, that's really what you're talking about.
Yeah, if it's a cartel, who hasn't watched a mafia movie? You have the families, right? And the families are they get, even if they're different in size of their power inside that criteria, they got the same respect going on, right, Joe? And hey, if China says, "Well, I got this going for us," and Russia's got this going for us, and we need to change, I need more territory, I need a bigger piece, right? And that's what you're saying, Joe. It's the cartel is changing who gets what piece, and we'll just have to wait and see what they come to, because these wars are going to be how the bankers are going to change economically how things are run. Yep. I mean, 87. Yep. I just talked to somebody yesterday. The 87,000 new IRS agents, which started a couple of years ago. I was talking to a guy. He was talking about being a sovereign citizen. The whole thing about getting out of the system. But the thing that struck me as he was talking, as he was actually talking about paying federal income tax and how he's in his way was trying to make sure he didn't have to pay it. And he said about the risk. There's a lot of risk involved in trying to play that game. And he talked about how, well, he learned a bunch of stuff about how the IRS actually does audits and figures out who they chase. Well, as he was talking, I was thinking, you got this thing called AI, which is just algorithms, right? What can an IRS agent, a single agent, really do? How many audits can he really do over the course of a year? I don't even know, 200, 300 maybe in a year if he's really cooking. But how many people can they collect from by just sending those threatening letters out if you've got a way to technologically have one agent do 10,000 audits a year? Even if he only collects on 2,500 of them, he's up to 10% the amount of audits and the things he can do. And so we're looking at something, Joe, in the near future where the average person is really going to be hurting if you don't get your affairs in order and learn how to protect yourself, because this movement, this shift in the economy worldwide is happening right in front of us. And when it happens, they'll blame a Russian war. They can blame a Middle Eastern war. What it's going to end up doing for you is, by the way, there's more taxes here, and now these IRS agents, they have this like AI thing that tells us everything you're doing all the time. We don't even need digital currency. We just see it. The AI is telling us what you're going to do. We're going to tax you on what you're going to do. Unrealized gains, all this stuff is in the cards, Joe, because to save their system, they'll sacrifice any of us to keep their system in place, Joe.
It's great points all across the board, from the mafia type perspective, right? What China's really, and China's the leader of that, right? What they're saying is, hey, we're going to take some of your territory. That's what we're doing, right? We're going to get a bigger piece of the action. And then you start talking about taxes here. People have no clue how big of tax increases are coming over the next 5 years. We laugh at like California and New York. Get ready. It's coming everywhere, whether you like it or not. Patriot Radio News Hour, final segment coming up. 800-951-0592. Gold's almost 23.35 now. Silver approaching $30.25 an ounce right now. $20 gold pieces. The Stone Cold lead pipe lock of the week here. $2,495. And I've got this bad feeling that Jay Powell is going to be what Jay Powell always seems to be, this overdub. And we've laid out why, right? We understand why they have to do what they're going to have to do. But I think we're going to see much higher gold prices. And to Jason's point, we could see gold rally now for a big sustained rally for the rest of the week and into next week if people, and already I just saw somebody, Jason, must be listening to you, because they just said, that rate cut may be pulled into July now. So keep it right now. Put your money to work here. $20 gold. We could be looking at $100 higher tomorrow on a $20 gold piece. Yeah. I think that would be let's just say gold finishes somewhere around $23.50. I expect, gold to be probably, $20 gold pieces, $25.95, something like that. So this is a big, big opportunity here. Take advantage of it. $2,495 at 800-951-0592. And apparently another cargo ship, Jason, just got attacked over there in Yemen. It seems like now every week it's another 2 or 3 ships getting hit. Sooner or later, this war is going to escalate, isn't it? It just seems like it's almost inevitable.
Yeah, the Houthis were able to actually get a missile to land in Israel a few weeks ago or a month ago, whatever it was. They shoot a lot of stuff that doesn't make it, but the fact that they had one success is going to encourage them to keep trying. And so all the stuff that's floating through the Red Sea, that's going to be a lot easier for them. And the escalation is going to happen, and the CPI numbers, Joe, that is the month over month and the year over year number. I don't believe at this time. They're crafting a story. These numbers are now, in my mind, fictitious beyond what they normally are fictitious. And they're gonna paint a picture that's gonna be rate reductions. Everything's going to be cozy and happy. We're going to have the stock market looking all happy. All assets are going to start climbing. Some of them shouldn't be. Some of them, like gold and silver, should be. And I guess CPI next month should be really good then, Joe. Right? If it's going to drop,
right.
Drop when it should be going up. And I don't see it. I don't see it right now. I mean, right now we don't have the market destruction to support this, and we don't have the price reductions, or at least the price is stabilizing. So let's see what next month has to offer. I have a feeling the CPI is going to be lower next month, and they're just going to paint themselves a nice rosy picture to lower rates. And get ready, because that June gold, we could see those numbers go up the rest of this month, and we might see gold's not very good in July, is it, Joe? But this July, we might see gold doing good in July.
Right. Normally we get that softer month there. I think all bets are off right now on what's going to be happening. We knew this going into this year. We told you it was going to be the year of chaos. It is absolutely living up to that billing. 800-951-0592. Jason and I are coming right back with the half-empty cup. And I'm going to tell you right now, you are not going to believe the story I'm going to open with. I don't believe it. It's incredible. It's everything that's wrong with America coming up next.